Hello, everybody. Welcome to today's discussion. We are talking about how to accelerate, not just jump on the fires that we all have to put out last year, but how do we actually keep that going and accelerate the innovation so that we can actually build a disruption-proof technology stack and environment for the insurance industry. I think we all had a bit of disruption, opportunity, change forced upon us last year, and we responded in kind. But how do we make that sustainable and to not take us down or grab all of our resources in those tough moments like we faced last year? The industry has actually done an amazing job with that so far and responding and being resilient and really jumping ahead like 5 years even in terms of where we were and where we wanted to be. We didn't have a choice last year, and so we did that. But now the question is, how do we make that sustainable and keep that pace in a more consistent and manageable way? To that end, I'm your host today. I'm Brian Falchuk, managing partner of Insurance Evolution Partners and the author of the book series, The Future of Insurance from Disruption to Evolution. And I am joined by a fantastic panel today for this Reuters events insurance discussion. Let's go around, I'll go around the horn, and then I'm going to ask each of them to give some thoughts. And after we share those thoughts, there's going to be a lot of time for Q&A, which means throughout this whole discussion, please do hit that Q&A button towards the bottom of your screen in Zoom and ask your questions there. Try not to put them in the chat, put them in Q&A. You don't have to wait till the end. If something strikes you that you want some thoughts about, I will make sure that our panel brings their minds to bear on those great questions that you all share. So I'm going to go around the horn. Gene Finnegan joins us as the Vice President of Innovation for Nationwide. We have Reid Colson, who is the Chief Data and Analytics Officer from Markel. And then Adam Evans joins us from Airkit, who is sponsoring this great discussion today. Adam is a co-founder and Chief Technology Officer at Airkit. I want to lead things off with Reid. Reid, share some perspective from Markel, and interesting. We hear lots about personal lines and small commercial and all that. Markel has a lot of different interests in the market, but the strength is in your specialty lines business. That's what you're known for. So maybe a different perspective than what we tend to hear about in so many of the discussions. So I'd love to hear where Markel is on this idea of really allowing ourselves to keep moving forward.
Yeah, thank you, Brian. I appreciate it. On behalf of Markel, I would like to thank everyone for joining us and for letting me share my thoughts on data along with this distinguished panel. I'll start off by saying I've been in data for over 20, I don't even know, 20 plus years. And I've stayed because I found every day in data is essentially a treasure hunt. And what's nice is today there's really a premium on being able to use data to improve your operational efficiency, to grow your revenue, or to grow your profits. And being a company that can do those things to monetize data, doesn't just happen. Companies don't wake up one day and just start doing data analytics. You need a plan to get there, and really that plan is a data strategy. At the highest level, you can think of a data strategy as a blueprint for creating a data-driven organization. It's your plan to ensure that you can acquire and provide high-quality data that is easy to use for analysis and for decision making, across your organization. In my mind, the key to crafting this plan is really about starting with the business strategy. If the data strategy doesn't support the business strategy, it isn't achieving its purpose. But once you do understand the business organization, what they're looking to accomplish through that business strategy, you can begin to identify the most relevant use cases for data and for analytics. And so I thought what would be interesting is to kind of talk this through as a bit of an example, by way of saying that, what you need to do is make sure you're going to have the data available to you to do all of the types of things that you hear about in the news today. So since this is an insurance panel, let's assume we're starting with a business objective that is growing premium. So when you have a business objective like that, you tend to have lots of working sessions and brainstorming sessions on all the different ways that you might do that. Maybe it's adding underwriters, maybe it's adding distribution channels, maybe it's new products. And so for this example, let's assume that you think adding a digital channel or growing your digital channel for quoting business would be the most effective way, or one of the most effective ways to help you grow. Well, how can data help you prove that out or test whether a digital distribution is the right approach for your company? What you might do is you could start by looking to see if you're even capturing any data about what distribution channel business is coming in through. And so if you're already capturing something that says digital versus not, you could do some initial analysis to look to see how your digital channel is growing relative to other channels because you have that data in place. It'd be a good start. But if you really wanted to go deeper, what you could do is you could set up a test and you can use data to segment populations and really, prove out whether or not this idea of a digital channel would drive more growth. This sounds simple, but what it means is you're going to have to capture, track, or calculate, a number of different things. So, for starters, you're going to need to have a way to identify who's in your test population that's going to get some sort of treatment, whether that's a communication about a digital channel or an incentive to use it. And in your control population, the group that's not going to get any sort of treatment. And the reason you do that is so that you can actually measure lift by the difference in strategies. You're going to want to track the distribution channel. You're going to want to track premium. You're going to want to track premium growth. So if you go in and you do that, then as you run this test, you'll be able to monitor along the way, and you'll get to a point where you could say, it is or it is not driving the kind of growth that you're looking for. And so if you, get to, a point of the test where you feel like you have enough volume and there's significance, your test and control populations are similar enough, you may be able to come back and say, yeah, if we did, more investment in our digital channel, we can increase growth by 15% over our non-digital channels. This is where it gets really interesting because you'll almost certainly get 10 or 15 follow-up questions. And if you didn't think about these questions before your test, you may not have thought to track that data. So what would likely happen is you're going to get questions like, well, does geography matter? Does this happen more on the West Coast or the East Coast? Or, do we have certain distribution partners that are more likely to adopt the digital channel than others? And are there things that we could do to help those that maybe haven't adopted it? Or are there certain products that tend to work better? And you get what I'm saying, but what that really means is as you go down this path of trying to become, a data enabled or a data driven organization with respect to strategies and decision making, you're starting with that business strategy. That helps you identify data strategy. And data strategy is really about the use cases that are going to create value for your company. And then understanding from those use cases what sort of data you will need to track, make sure you have high quality, have the right frequency, and have the right grain of detail so that you can then, do the analysis, do the reporting, and handle all the follow-up questions that you're likely to get for your company. So again, just a way of recapping is data is a treasure hunt, and there's a premium on being able to do these kind of things, and it requires forethought onto what types of things you're going to want to do analysis and reporting and testing around so that you can design your data capture strategy so that you'll have the data you need to apply the techniques later down the road.
Yeah, Reid, this really speaks to me because I think as an industry, there's a couple of things we've generally done around data where it's not strategic, it's a response. So it's just data's that stuff you end up with on the back of being an insurance company, and there's lots of it and it's a gold mine and people respect it, but it's the afterthought really. It's just the output of being a carrier. And that robs you of figuring out the real value in it because you haven't pre-thought about how you might use it other than just it's sort of this happy byproduct. But then also we end up with like, oh, well, we've always done these 12 reports. No one really looks at them. So when we build the new data tools or we have the new, whatever new data lake or predictive analytics or whatever it is we come out with, we have to replicate those same reports because people expect them every month. And it's like, well, why are we even asking the questions in those? Or maybe there are no questions. It's the report everyone got. They sort of look at, set aside, and move on. Is that valuable? So I love that you're taking it back to, well, what is the business actually trying to figure out? Now let's design our data, our analytics, the tools that we have to deliver those answers to drive insights and better decisions rather than just like, well, we've always built these reports, so we have to because that's what month end is about. Which I think a lot of us, as much credit as we want to give ourselves, that is so much of what goes on in the industry when it comes to data. So from your mouths to the strategic ears of the industry, let's hope that there's a continued push looking at it more strategically. So thank you for that. Gene Finnegan, Vice President of Innovation at Nationwide. I'd love to hear your thoughts about how to protect ourselves from the disruptive forces that can be good, but are disruptive as well, and can take us off course, and maybe give us some forethought on how to address them.
Yeah, thank you. And I appreciate that setup by both you and Reid talking about, some the data and analytics strategy and how that can really enable things. I'm going to talk a little bit about, I'm an innovator, and so I think of data and analytics as an enabler of many things that I do. So let me kind of talk that through. And like Reid, I'm also going to talk through a couple use cases, which I think are really interesting and really exciting. So just to give background, my role at Nationwide is to lead innovation for our enterprise-wide initiatives. So think of that as those initiatives that are outside of our core businesses. Our core businesses are home, auto, commercial, life, annuity, and retirement. Yes, we cover a broad spectrum. So I work on the things that are not core aligned. So it's really creating the vision for the future. And Nationwide's a 100-year-old company, so it's with humility that I say that my team is really like the tip of the spear in terms of building those new businesses. And the way we're organized is that I've got 3 teams, think of them as like mini startups who work within that corporate environment. And at any given time, we're running a portfolio of 7 to 10 projects, depending on size. And those projects are not constrained in any way in terms of go-to-market. We'll build by partner or combination thereof. And tech and data and analytics are a key consideration in our go-to-market choices, and I'll talk about that a little bit more. Nationwide has had a long and detailed history when it comes to like, how do we attack disruption? How do we attack our data challenges? How do we attack the changes in the industry? And we've done different things at different points in time. They've been reactions to disruptions in the market, as well as reactions to disruptions in consumer trends, technology. I'll just give you a couple examples there to kind of give you some idea of things that we've done over time. At one point in time, we were very M&A focused. So we went out to, we looked to buy things in order to really attack some of the challenges that we've had. And that was probably some time ago. I want to say mid-90s was our big acquisition period. And at that point in time, we bought a pet insurance business, which, by the way, during COVID looks brilliant because everybody has a pet now. And we also bought some distribution through people like Allied. We've also bought, at different points in time, we've thought about ourselves as a product manufacturer that was very backed by the technology that we needed to do that. So think about the arms race of the late 90s, early 2000s. An example there would be doing things like putting mutual funds in annuities. Again, the requirements in order to do that were significant and really important. But what I want to talk about today is the latest wave of what we're doing. And I think that this is the most holistic and the most impactful, because what we're doing is we're bringing together consumer trends in the market, our own strategy. And by the way, it's definitely, if people haven't read Goliath's Revenge, about leveraging your crown jewels for disruption and innovation, I highly recommend that book. That's something that we think about a lot at Nationwide. How do we leverage those crown jewels? And our data is one of them. And so we bring together consumer trends, our strategy, our crown jewels, and then insights from users. And we're really bringing those together to activate with the underpinnings of all of the data and technology work that we do. One of the things that I think is important to call out here is, when I gave my little bit of an intro, I said, we're home, we're auto, we're commercial, we're life, we're annuity, we're retirement at Nationwide. We cover a ton of territory, and in a lot of those businesses, we're a top 10 business. So what we've done to organize and really accelerate is we've designed our work really in 2 buckets. One is to stabilize the core and support the core and digitize the core. And there are entire teams, this is not my team, but there are entire teams designed to do that. what we've then done is we've separated out the disruptors, and that's really the area that's my team, in order to make sure that we are resourcing them appropriately. At different points in time, we had those two groups had been stuck together, and we found that the prioritization was always difficult because the core priorities were always bigger than the disruptive priorities, because we couldn't justify it in terms of business case. So really separating those two out became critical for us activating, and I think it's really helped us to be impactful. And then the other part that's really impactful is that my innovation group sits underneath the umbrella of corporate development. And so we've got the M&A arm, the venture arm, all of those arms are strategic partnerships, are all part of the work that I do. So, you know, I wanted to, that sounds all theoretical, like how does this actually happen? How do you actually do this? You've got these two separate groups. So I thought what I would do is maybe go a little deep on one of our businesses, which a lot of you are probably familiar with, which is personal auto. You know, the way we've attacked personal auto in those two buckets is to say, you know, for our core, we have an intermediated strategy. We focus on our independent advisors. And what we've done is we've digitized that experience to give them a seamless, effortless way to sell nationwide. And that has been work that has been underway for some time. Nationwide was an exclusive agent carrier up until a few years ago. And so the switch over to IA meant that we really had to do that relatively quickly in terms of making sure that we understood the needs of those independents and what they really were looking for. And that's really about being seamless and ease of use. Then simultaneously, I said, you know, we've got to do both these things at the same time. We were looking for ways to disrupt the industry, and you know, telematics is something that we're all particularly familiar with, probably in the auto insurance space. And how do we use telematics in terms of experience and product design, and how do we do that really disruptively? And I'll call out incumbents like Nationwide. I think we've traditionally used telematics and the data there to help with underwriting, to kind of help our profitability, and maybe not, which is maybe more of a business problem than a user problem. And so I think some of the exciting work that we're doing right now is really turning that on its head. We're looking at telematics, you know, information in order to create really different engagement patterns with our users, as opposed to just underwrite them well. And so how do we do that? We've got a big chunk of work going on right now where we're really leveraging our behavioral scientists and using some really interesting techniques around things like nudge theory and positive reinforcements to help to establish those new patterns of engagement. And in order to do that, we need robust analytics platforms that enable that kind of real-time, always-on data, but careful not to be overwhelming to the user. And that we believe, and we've seen evidence that will move our users from, you know, just being information receivers to action, and then hopefully we can commercialize that action. So that's some of the really interesting work that we're doing there. I will call out some things to think about here, you know, because I mentioned some of the behavioral concepts that we're really working on with the underpinnings of data and analytics. What we've learned are that we need to be careful about not going too far with the amount of data and personalization. That sounds crazy, but you've got to stay on the right side of creepy, is what I tell my teams all the time. And the way to do that is to make sure that the benefit to the users are significant. We've all had the experience of being served ads, and that can seem creepy, except when we want them. So when the benefit is there, I think you stay on the right side of creepy. This is a constantly moving target and something my team monitors at all times. And I do think that there's some generational aspects of that as well. And then another thing we think about is to be careful not to be too directive with our nudges and our behavior coaching. This is a hard one for insurers, I think. We like to think everyone is underinsured. I've heard for years that people think that our users, our members are underinsured in terms of life insurance. I sometimes question that. Maybe they just don't see the value. So we need to be careful in being too directive so that we don't bristle and trigger what my behavioral scientists will call reactance. And so we don't want the people to, our members, to react so strongly to us being directive that they pull away. And then another cool one that we work on is how do we leverage the flexibility of things like nudge theory to get impact that is that really can be quite inexpensive. Meaning, if you provide the right data at the right time, it can be a really inexpensive way to acquire customers. So those are some of the really interesting and exciting things that we've got going on, where we're working to leverage both the core things that we've got going on as well as this new disruption. And so if I kind of say in summary kind of what I went through there, we're a large incumbent, so we've got to digitize the core, we've got to disrupt for the future, and we've separated those work streams and work sources and resources. And when we think about the future disruption, we try to be outside in, combine the market, the user, data, and technology to really disrupt. And then our current focus is flipping data and analytics on its head, not just to underwrite, but to engage.
That's great. Gene, you gave a few things, as you said, for people to think about, and there's a theme to a lot of what you talked about. This telematics point, I think, summed it up really nicely, where the industry, not calling anyone out, but the reason why it was brought about and the way it was used in first use cases was for business value, for underwriting value, for actuarial value, to see what customers are doing and to make decisions around that. Great. There's lots of good from that. It's not a bad thing to do, but it's looking at it from the other side as well. What does the customer actually need? And the same thing to your point of moving from exclusive to independent agents, their world's totally different. And if you're only thinking about, well, here's why we're doing that for us, and so this is what we need to do, I mean, it kind of goes back to Reid's data point. You're not really thinking strategically about what that environment's like and what your true needs will be and how to keep on top of that. So are you ever really going to meet the needs of this new channel or these new customers, if you want to call them that, partners, whatever the right term is, because it's different. And a lot of what you're talking about is putting yourself in their shoes, right? So personalization is good until it gets creepy. Well, through their lens, or they're underinsured through our lens, not necessarily through the consumer's lens, or maybe they don't understand. So we're not going to see the right way to address that if we just keep judging it from where we stand. So I love this consistency in sort of projecting yourself out or getting out into the people that you're trying to touch, rather than just looking at your own use cases and needs. Hopefully I didn't get any of that wrong, but I'm catching a theme across each of these. So that both Reid and Gene have sparked questions. I see a couple things coming through in the Q&A panel. People asked what the name of the book was, so I put that into the chat. It's Goliath's Revenge. There's a link in the chat there. But for other questions, by all means, use that Q&A function. The gates are open. Pop them in there. And please do put them in Q&A, not in the chat, so that we can manage the questions well. Adam, with that set up, you bring a perspective outside of any particular carrier, serving to the industry, building solutions. Talk to us a little bit about what you're seeing in terms of helping the industry get to a place of more sustainability, so that disruptions are purely about opportunity and not these moments where we don't really know what to do and we redirect everything just to catch up.
Absolutely. And Gene, just to kind of carry on, one of the last things you said was data as a means to engage, not just for analytics. And thinking about that, that engagement, the way that we think about that at Airkit, and part of the reason why my co-founder and I started the company 3 years ago, is that moment where a brand and a consumer are kind of engaged in systems engagement, and what kind of that it creates as far as CX, kind of the consumer experience of this. And just thinking about from kind of Silicon Valley and seeing upstarts and kind of outsiders build kind of new innovative ways of thinking about insurance or any other industry, and asking ourselves, what is stopping, or what's the hardest part of all of these great brands that have been around for longer, that have been doing this business and transforming themselves to not only compete, but win in that. That's why we started Airkit, saying how do we enable and empower those companies to create digital transformation faster. And what we focused on was that engagement moment, the moment where the customer touch point happens. And we think about that, and I kind of want to share maybe like 3 things that we're seeing in insurance. Now, Airkit applies, it's kind of industry agnostic, although a lot of our customers are in insurance and insurtech and our carriers. And so I was thinking about what are some of the trends that we see specifically around insurance, and I'd like to share some stories. But three trends in particular about kind of accelerating the digital transformation. One is thinking about that last mile CX, that touch point, that engagement as a way to accelerate or bridge the transformation, that you're not tying it to kind of the back end legacy systems that take longer to upgrade and you can move faster. With that, I'll speak about that. The second trend is about how we build apps, big monolithic apps, big mobile apps, thinking about these big kind of digital investments versus what we like to call micro apps. And I'd like to speak about how to roll things out faster and just a different approach to thinking about building these digital experiences. And then the last thing I want to talk about is meeting the customer where they want to be and not letting digital say you have to go here to have a digital experience, otherwise you don't, and thinking about how you can build that into kind of the passive experience that you want. And that can be proactive as well, Gene, per data as a means to engage them in the medium that you'd like to as well. So just kind of unpacking some of those, that last mile CX is a transformation bridge. We've got customers that are 100 years old in insurance, and they have legacy systems that are large and they're running at scale, as I'm sure many of the listeners today are. And they think, how can we change? And one of the things that we've helped them do in the middle of replacing back-end systems, these big multi-year efforts, is say, well, let's just talk about first notice of loss and what the customer experience would be. Let's talk about a complex form, for example, statement of health, or other means of at these moments of touch points, and just create experiences for those interactions. And then what we'll do is it's easy to then use those experiences as you upgrade the underlying systems to just basically make them map to those. The consumer wouldn't know the difference. You can kind of have that transformation, that effect, today or very soon, and disconnect that from the larger kind of underwriting system or legacy system upgrades that you might be going through. And this also extends once you start separating out that system engagement from kind of the back end. This also works, for example, some of our customers are doing with partners as well. So being able to, for example, embed quoting and tools like that into other kind of digital properties and work through those brands and partnerships. As many people in the insurance industry, it's complex and there's lots of kind of parties that are involved. And so being able to have those systems engage branch across organizational boundaries as well, I think is a testament to saying disconnect it from kind of that back end and move faster. We don't have to make those things necessarily work lockstep. The second thing is about how we build apps, and this is my history of just building software and coming from kind of the engineering background and thinking about all of the good and bad things that means as a technologist. I will say that there is one thing that happens when you start adding more and more and more into an application. Imagine like a mobile app that you put on the store for your consumers. The more that you add into that, the more complexity there is. Now that sounds obvious, but what ends up happening is it's not a linear kind of cost function. You get many teams collaborating. You get product teams that have to decide priority and kind of cut the line about what gets in and what gets out. You've got user experience challenges about how to create attention within the app. And you, in the app store, in the traditional like native mobile applications, you don't have that many apps. You really have to have one. So the challenge is trying to do everything in one space. So that naturally leads you to having this kind of growing cost function of making new experiences. And we think that is the wrong approach. We think that really what we should be doing is talking the same way that monolithic backends in the last 10, 20 years have been going into microservices or service-oriented architecture, whatever you want to call that kind of trend. We think about taking monolithic apps and breaking them down more into what I mentioned as the kind of micro apps. And we think about these as lining a lot closer to the actual business, the line of business, the analyst, and the people that really understand or closer to the customer about what that flow should be that actually returns value to the business, and it's what the customer wants. We want to be able to say if we can shrink what it means to build an app and make it easier. And our approach is a low-code approach, kind of like a drag and drop, because our audience is empowering non-traditional developers to be able to do this, to create smaller apps, less complex, deploy them faster for single solutions, but yet balance that with kind of a roll-up of what IT or digital services would need for policies, templates, standardization around authentication, brand, and a lot of the things that would say this is how we have to build. And if we can trade off those kind of templates in a way that empowers people line of business to build smaller apps, they can launch them faster, they're lower maintenance, and additionally, and really that's just about accelerating that transformation. And the third trend is just the idea of meeting the customers where they are. So some people call this like multi-experience. We think about things like a contact center versus a mobile application versus a website. Traditionally, people buy products that do one of those things. You buy contact center software, maybe you buy a chatbot software, you're building mobile applications, there's a different team building your mobile application than is building your websites. And all of these things are hard to coordinate. Customers really don't think that way, right? They just want to deal with the brand and deal with the claim and have all those things be, have continuity or consistency between them. So we think about this idea of multi-experience as being, if you're going to be making new investments, think about making investments in technologies that can bridge those channels and do that in a way that creates kind of a consistent kind of claim tracking experience, for example, off that first notice of loss. We would also say, when you're saying meet the customer kind of where they are, every time I think about calling into any brand and in kind of a hold music or an IVR system, hearing that, I can do more if I download the app. I feel like that is a symptom, perhaps, of like an earlier mistake, which is maybe there would be a way to deflect me from that call immediately, send me a text message, and give me a digital experience that's authenticated, as opposed to telling me to stop and back up and go do this other thing. And so we think about multi-experience and meeting customers where they are as complementary to that kind of like smaller app, micro app strategy, where you can start engaging people with voice, text, and web with the phone or the computer that they have in their pocket already with zero installs. It's actually cheaper to build and deploy. It's meeting them where they are. And ultimately, those experiences help you bridge that last mile CX, the broader underlying digital transformations for those legacy systems.
Adam, we got a very like point specific question in the chat, and I want to point out, put your questions in the Q&A so we can manage them. But this one, there's a quick one to hit. When you talk about micro apps,
Mm-hmm.
does that mean that you end up with like 12 little apps in the app store that people have to download,
Great
or is it
question.
about functions that just like on your back end that you're then bringing together for the end experience through connectivity of APIs and whatever else brings it out?
Great question. I really appreciate the opportunity to clarify that. You should only have one point. You only have one 800 number, or you should only have one app in the App Store. You should only have one domain. The idea is create single points that are common for people to engage with you on the inbound. However, once they arrive, what we're talking about is creating the things that they do. So it's to be common across all those channels. That's where we're focused. Not saying, Airkit doesn't build portals, by the way, that says this is where everything that you do has to be on Airkit. That's not the strategy. It's instead your first notice of loss experience. You should build an app once and be able to deploy in a voice medium. So people coming in that are calling in that are doing their first notice of loss have the same experience as that if it's a chat over Facebook Messenger for a different generation of customer, or from the website, or for your existing mobile application. You should have one common logic about how that works that can be multi-experience. That is our micro app. So it's not the front line, it's what happens immediately once you're in any of those channels, to make it so you can define it once and kind of roll out all of the things that a customer might do, is where we're more focused, as opposed to focusing on the channel and saying this is a mobile web app building system. We think that's the wrong way to approach it. And it should be more about what customers are doing and building kind of smaller intent-based kind of applications and experiences.
No, I appreciate the clarification. I think to your point on the word continuity, which is a brilliant way to put, what are you trying to deliver with a multi-experience kind of experience? Not only is it economically better to develop it once and to be able to deploy that same bit of functionality across multiple interfaces, ways people are working with you internally and externally, but how else are you supposed to have continuity of experience if the tools behind each experience are totally different? So that unification allows for a much higher chance that the customer experience is going to be, the same and equally benefited from all the investment you're making in that experience, no matter how they come to you.
Mm-hmm.
Brilliant. We have a few questions in already. One of them just says hello, Adam. So I count that.
Hello, Patrick.
So I'll count that as answered. Great. So the first one, if you go back across the years of insurance conferences, the buzzwords that have been out, we're still waiting on many of them, and this one calls out blockchain as one of them, which has been like on the tip of everyone's tongue for what 5-6 years, and we're still sort of waiting for it. Maybe it's starting to have some headway, but the question is around some of these kind of next gen or the bigger technologies that we're waiting to see, even AI, which is definitely here, but maybe is a baby version of the AI that people were dreaming about in 2015 when they said everyone's job will be gone and it's going to be Terminators handling claims for everyone. I don't know that that's quite what they said, but something along those lines. So what are some of the bigger next gen technologies that we feel are brewing and may impact some of the trends and the next round of disruption that we see? So I'm curious if people have a big one on their horizon or that they're studying. Reid, it's been a while since we heard from you, so I'll start off with you and put you on the spot to begin with, if you don't mind.
Okay, thanks. Maybe two thoughts I'd share. One, I think for us that looks interesting and appealing are things that allow less technical people to do more direct delivery. So some of the low code solutions and things that you can do in that space to be able to assemble solutions and build speed to market, I think is an interesting place that we see as having promise. And I think the other one back more on the data side is, in the, the IoT space, what sorts of things could provide benefits to customers or support for risk management, decision making, say water sensors, things like that. And so those are probably the two, in the last little bit that we've probably been paying a little bit more attention to than some of the others.
Yeah. Gene, I'm curious if you have the same kind of list or different things you're looking at, given that your lines of business are a bit different and you go, as a company nationwide spans quite a bit outside of that core P&C space.
Yeah. So I think it's more like a yes and on this question. I also appreciated the intro around, in 2015, we thought we would be somewhere that we're not right now. But I do want to say that we've come a long way. So like when I think about things like AI, intelligent underwriting, like we have come leaps and bounds. And so, our life insurance business has been incredibly impacted by that in a very positive way. So that's a huge one. Also agree with Reid's comments around IoT. And this is one that we think, definitely hits our P&C businesses. And we have a big commercial business, so P&C in terms of both personal lines and commercial lines. We find our commercial lines, kind of partnerships have maybe figured out how to commercialize it a little bit quicker than on the personal line side, but we think that there's some interesting stuff there. Where I might take this question is to flip it a little bit and to say what we're trying to do is take one of our major populations, our major target customer groups, and one that you might be surprised about, which is seniors, and figure out how to use technology to really enable aging in place. So one of the things that we know that is a huge trend is seniors want to age in place. They don't want to go to a nursing home. They don't want to leave their environment. They don't want to do that. More than 80% of them would like to age in place. And sometimes that's just not possible. So we're trying, one of the things that I think is really exciting is how to bring these technologies together in a way that works for that type of population. So if you think about sensor technology and all of the things that we've got going on, how do we apply that in a way that works for aging in place? And What is so cool about this is the benefits, sure, are for the folks that want to age in place, but they're also for that sandwich generation, people like me who have parents who are aging in place, and we're trying to figure out how to enable them to stay in their homes. And so to me, that's some of the interesting things that's going on there. I think, I talked a little bit about engagement and the behavioral stuff that we're doing. AI is going to be a big component there for sure. And again, trying to figure out how to do that and stay on the right side of creepy, because that can get a little weird. But that's another big one for us. So those are probably the big buckets, which is, it's a lot. It maybe isn't what we thought it would be in 2015, but it's a lot.
I don't think any of us in 2015 had a clue. So certainly the world is nothing like we ever thought it would be. Adam, looking across the industry and with an engineer's perspective, I always say the best thing you can do is tell an engineer something's not possible, and then let them go, and then things will be solved. So what's your take on this? What are kind of the big things brewing that you're keeping an eye on?
Well, so I think, just kind of both Gene and Reid, you have really great points. In particular, Reid, you mentioned some of the idea of kind of low code and moving into that. And so we see this for example, with RPA, robotic process automation, for more kind of the back end services and the inside of the house and the underwriting systems and kind of the operations getting more automated. And I would say that you could look at that as AI, you could see it that, but really in my mind, it's about just kind of going back to fundamentals and saying, how do we empower people to create automation and create tools and actually empower people that weren't writing code? Because you could do these things with code before. How do we enable more people to effectively create that are familiar with the processes? That's kind of what RPA did. And we think about how is that going to transcend itself, that same idea of empowering more people that understand the process to then be able to articulate that in a way that creates digital experiences and automation, and bringing that more into that kind of customer, that last mile CX bit. And so when we say low code, that's a technique, that's an approach to like many problems. It's not really kind of just a category in itself. And we think about taking that technique of low code and saying, can we actually create and change what we view matters the most from the brand, which is what consumers actually see when they need to interact with the brand for an insurance claim, when they need to set up their business, when they need to apply for life insurance, when they need to get their dependent to apply and do their statement of health, when all of those touch points are really where people form an opinion about the brand and what the experience is like. And so we think about those moments. How can we apply this idea of low code, enabling more people that understand those problems to go after it? And Brian, you mentioned, challenging an engineer. And it's, I would say that other people love to be challenged too. They just need to be able to have the right tools to succeed. So in this idea of low code, it's about creating tools that enable more people that understand the problem to be able to win for those kinds of challenges as well. So that's kind of where we're focused. And obviously we think that's just a massive trend kind of across, all industries that's happening right now, is that touch point and going more digital across all things and kind of multi-channel.
Yeah. It's interesting. So no one's thrown out like the single big hashtagable word like blockchain was a few years ago. And instead we're talking about things that enable something. I think that's a big shift in mindset. Adam, everything you see, you didn't name a big tech. What you named are different ways of approaching, kind of overused term, but the democratization of these things. How do we get, anyone can do this now. It's like anyone can publish a book, start a company, etc. It used to just be reserved for, the few. I wanted to touch on, there's a couple of questions that are asking specific speakers for specific examples of some of the things you're doing, and I want to try to broaden those out a bit. Maybe on the back of Adam's point, where enablement is much more widely available than it used to be. So the specific questions, one was, Gene, for you on use cases of behavioral analytics, specifically in claims. And then Reid, there were some questions for you about how you're using or some of the specific success stories around data innovation at Markel. And Adam, we already had the hello to you, and there's a sub question there for you about more on micro apps. But I wonder if we can maybe get into some of the specific ways some of these new approaches are playing out, or some of the mindsets and the approaches you're using. Do you have an example where it's like, this is a poster child for what's gone really well when we've changed our thinking on this? Reid, if you don't mind, if we can start with you.
Yeah, sure, happy to. Speaking of the question around, some success stories that we've had. There's one that's been really interesting, and probably to give some context to preface it for folks who are not familiar with Markel. We have roughly 100 different products in the insurance space. So, as an outsider looking in, you may know us as one or two or five of those products, but you don't know Markel for all of its products. And internally, we had many different systems that were trying to manage product data. So a few years ago, we went down this path of basically mastering our product data, right? Creating this single version of the truth for what our products are, what their descriptions were, what our limits were, who the underwriters were. And we built this data model to support that, right? Initially, one of the first things is we had a whole bunch of teams that no longer had to independently manage product data. The second thing was almost immediately we realized that our product data was more up to date. So you didn't go into one system and get, underwriter A and another system as underwriter B for your contact. Once we had that data in place, we actually started to, kind of using terms of folks today, build the systems of engagement around it. So we created some search interfaces. We made it mobile ready. And we started publishing it internally so that our associates, when they got asked questions about products that weren't maybe in their domain, they could be expert in real time, not have to go off and research and do connections. And so they had all that information at their fingertips. We've now moved to where we've created that engagement externally outside of Markel. And so some of the things that happen now is we're able to create microsites around products because we have all that product data along with all the content associated with it in days, not months. And so for conferences, we can create microsites. For product strategies to combine across our reinsurance, international and U.S. businesses, you can get one consistent sort of look and feel. And it's led to a lot of what I would call as aha moments with our trading partners saying, I didn't know you did that. I'd like to get appointed, or I'd like to connect you with this other part of our company because they want to do that business and you look like a great place to trade with. And so that was from just a pure data use case perspective, one of the really interesting ones before we even, started to do things like, machine learning or predictive modeling. And we have a number of cases around that, but I'll pause there and kind of let others share their thoughts.
Does someone want to jump in? If not, Gene, I'll go to bring Nationwide's experience.
Yeah, this is a broad question, right? Yeah. So I'm trying to figure out like where to dive in here. And I saw the comment there around behavioral analytics and or the question around behavioral analytics and claims. So I think I'll mention two things here if I'm going high level, because or maybe three around the things that some use cases and some examples that I think are really impactful. One is a really basic one, but I think Reid is sort of referencing this as well, is we worked hard to, we work with a lot of partners, like you name it, what type of partner, all the way from like an intermediary to, Costco. Like there's a ton of partners, and Walmart, by the way. I hope everybody saw that in the news that we are selling pet insurance through Walmart. So one of the things that we had to do was enable that, because every partnership was bespoke, and we had to like create the interaction layers and all of that in order to bring that partner on. And that probably makes sense for a Walmart, but it doesn't necessarily make cost-effective sense for every partner. It's not scalable.
Yeah. I mean, it hits at Adam's point, right? About like build the service and then reuse.
Yeah. So we created what we call a partner portal in order so that those connections can happen really, really quickly, and they can happen through, through to all of our businesses. What I would say to folks on the line is that didn't happen all at once. And, I talked about that breadth of nationwide. And so we definitely had to learn our way into, okay, we can portal people into a few of our businesses, but maybe not all of our businesses. And so I preach patience there, which is like, it took us some time, but now it's a very flexible way that we can bring folks on and have interactions with them. And Walmart wouldn't have been possible without it. So partner portal is a big one. The question around behavioral analytics and claims, here would be my push on this one. I think we can get lost in the sauce sometimes because there is so much data. And one of the things that we've really pushed teams to do, and this is very true of the claims team, is we have those, and I mentioned my behavioral scientists alongside the data folks, so that we're doing things like not just reacting to what's in the data, but reacting to the behavioral theory. The example for claims that I would say was really impactful was taking a look at choice architecture and really how people think through choices, and making sure that the way we were putting those choices in front of them actually worked with the way they think, not the way our data was organized. And so my push there would be, if you have the opportunity to bring in someone who can help you think that through, I think it can be very impactful for your claims experience in terms of efficiency, because you're no longer pushing them through a process, pushing your people through a process that works for you. You're pushing them through a process that works for them, and you'll be surprised at how efficient that is. So choice architecture is a huge one there. And then the final one, I think the only person on the call so far who has said legacy systems, I will call out, I did not say legacy systems until just now. But all of the uplift on the legacy systems has been enormous in terms of changing our business. There's not a system that hasn't been touched in the last 5 years in terms of transformation. Yeah. And what, having been in the industry for a long time, those transformations are happening it's fantastic to see how quickly they can happen and how impactful they are in the business, with things like speed to market in terms of product development, the way in which we can price better, the way in which we can literally soup to nuts in terms of back office. Those system uplifts have been really impactful. And I think that one of the ones that has been the most impactful that people probably don't see is actuarial modernization. So really modernizing the way that, the old school, if there's an old school actuary on the line, like really modernizing the way that work is done has been incredibly impactful for our pricing operation.
Yeah, no, I can imagine. Jean, your point on choice architecture, which is a brilliant way to put it. I'm curious if you've seen the impact on like NPS or satisfaction as well, because if you're serving someone who's going through, the worst thing they've ever gone through in their life, you can get them to be more efficient by thinking about what they're thinking about and how they want to experience, but then you also leave them happier because the process met the way that they were processing the experience itself, not just what you needed them to do to get it done.
Yeah, 100%. It has a total positive impact on NPS because it is the way in which people want to be interacting. And the other call out that I will make there is doing the behavioral work, doing the choice architecture work really helps you to understand where touch matters and where it doesn't. There are certain parts of the claims experience, because this was specifically a claims question. There are specific parts where, people would want high touch, and there are really specific parts where they really do not. Yeah. And so understanding all of that through behavioral work, I think is really impactful. And then that will absolutely increase your NPS. So I would highly recommend that people take a look at that.
Yeah. I love the phrase choice architecture. It's like thinking about the choices people make and then how do you, or want to make, and how do you serve that? Adam, you get the joy of looking across so many different carriers. So I don't expect you to have an example from Markel or Nationwide, but maybe there's some more specific things you've seen in some of your work, or maybe
Yep.
bring it up a level and you've got some general comments to make.
Yeah. So, I mean, Gene, the idea of that kind of high touch and low touch, sometimes you want self-service and automation, but in certain kind of claims, you want that kind of personal touch and being able to create the experience that's kind of consistent across those kinds of channels that are high touch versus automated. That's also part of what you think about here too, because everyone wants something a little different as you think about having your kind of like, as you're modernizing your systems of engagement and how you create that experience. That's that multi-channel aspect of that. Don't necessarily buy systems that are just one siloed kind of channel or CX kind of layer. So some things just to kind of throw out that we've seen is one of our customers in insurance for doing auto quoting flipped. Their model was traditionally an outbound method where people would quote and they would end up calling. One of the trends that we see, and this deals with meeting the customer where they want to be, where they want to be, is people don't really pick up phones for numbers they don't notice these days. I don't know about you, but I get a lot of robocalls and spam, and it's always declined. Turns out that's pretty universal as far as the data. Flipping this around with basically kind of that micro strategy where they came in and saying, let's just build an experience for this one flow. We worked with them and in about 3 weeks, flipped that experience around to use text. It was multiple, I think it was like a 3x engagement immediately just from doing a text and outbound and actually automated scheduling to basically flip the entire effort from kind of that sales contact center from an outbound effort to calls are just now coming in. So you still maintain that high touch part of the relationship, but completely flipped the operational side of it. The NPS or the CSAT that was reported out also increased. It was deployed in 3 weeks because it was very focused, that micro app kind of strategy, and layered into multiple digital channels, including embedding to partners as well with that flow. So that's one story to throw out right away. Other things that we've seen is just the speed projects that were literally 5, in one case, 10-year initiatives coming in and being able to deploy in 3 to 4 months. We generally see about a 40x lift just from the development cost of these things when you approach it with low code and you think about kind of sizing down and deploying individual solutions that create experiences customers want and actual return on investment to the business kind of immediately. So we've seen 40x with that as well. And we've seen when deployed in I mentioned kind of statement of health earlier, longer forms. A lot of form digitization is a big process of that. Insurance has got a lot of forms and traditional, as everyone knows. Thinking about making those forms easier to fill out with data, more easily accessible for, sometimes it's not just the employee or the immediate benefactor that needs to fill out the form, but engaging other people. Those people aren't going to have your apps installed. It's going to be hard to get them in digital. It's going to be hard to move off paper. And so thinking about those kinds of tools that you can engage people without the prerequisites of you must install an app, you must log in, you must do all these things. Otherwise, you go through the traditional methods that all of the upstarts that are going into insurance, they're not investing in those traditional methods. They're bypassing that phase. So this is where we start thinking about, start building a little bit wiser as far as some of the experiences that you can engage people quickly, nudge them. Gene, you kind of mentioned that kind of nudge there, being able to proactively notify people or engage dependents to, for example, fill out a statement of health form to ultimately buy the product and collect the premium. This is something we've done, and in doing that, not only did we work with a company that completed this 5+ year project, and I mentioned 4 months, but their actual pull-through rate is dramatically increased, nearly a 2x, and then also their customer satisfaction is increased in that as well. So there's a lot of opportunity out there. I think the one thing to leave folks with is this idea of transformation it's a long journey, and thinking about doing everything in massive, huge investments and lift, it's paralysis. It's very long to do this. It's hard. And in the name of kind of accelerating, just breaking the problem down into parts, both from the back end underwriting and the things that are going to affect the actuarials, as we mentioned, but also where we're focused is more that systems of engagement and being able to think about the problems that you want to solve and go after them more individually, enables an acceleration that you can deliver solutions quickly and break the problem down. And like I mentioned, have once those solutions are in place, even though they're kind of broken apart, it gives you the ability to bridge the other systems because you've now have like some separation of concern and interfaces that you can start replacing things more kind of piecemeal and fully transform your business in a way that you can get value earlier than later, and but not slow you down from big changes over kind of the multi-year horizon.
Adam, I think that's brilliant because you're talking about these micro pieces, these small, breaking it down into the specific thing that needs addressing in this moment that you can deploy more broadly. But you also quoted some huge returns and some huge lift numbers. So you said one thing was 40x, and having been talking with a carrier about something that was similar kind of lift, their CFO's response was, "Well, is that net of the cost of the solution?" And I was like, "Well, if we're debating if it's 39 or 41 instead of 40, X."
Yeah.
That's the
Yeah.
the world of problem that we're in. So just because you've broken something down doesn't mean the impact can't still be great. We don't need these monolithic projects to make meaningful impact on our results and our experience.
Yeah. That 40x, by the way, that's developer productivity. So that's a speed to solution.
Yeah.
Cost was similar, by the way, because in the world where you're so productive, you need fewer people to move forward. And by the way, that coordination through many people, that complexity with these bigger approaches is part of the issue of the cost function. And so as you get more tools where fewer people can self-serve, low code, and be able to move these solutions faster because there's pre-built tools and patterns and templates, and then have that kind of commonality, you get these order of magnitude changes. And that's really what we think about as we are building Airkit, and we're thinking about tools to help transform insurance and other industries as far as the way that people engage with customers, engage with the brands.
That's great. We are at time. We're over time. I would leave people with one build going back to Reid's original point is having that strategic view. So what is it you're trying to achieve? And then, using that to guide the overall objective, breaking it down into pieces, looking at the specific things that need addressing. And then Gene taking from your points around moving your viewpoint out into the viewpoint you're trying to affect. So stop looking at it through your own objectives and your own, well, what do we want? And recognize if you're trying to affect a change on the receiving end, you want the receiving end to feel differently, engage differently, choose you over your competition. You need to put yourself in their shoes. So, great way to pull all this together. Thank you to the panel for joining us today, and to everyone who stuck around. Thank you so much. Have a great afternoon.
Thank you.